Hi guys, welcome back to the channel. I'm Simon the Trap Trader, and happy new year to every trader. This is actually one of the first trades that I've actually taken this year, so I'm gonna be breaking it down for you guys as I always do. Right, so this is USDCHF. Nothing much happening here. If we look at this from the higher time frames, right, I always like looking at my charts from the higher time frames, so get an understanding of the bigger picture, so that you don't find yourself in traps, or find yourself being trapped rather. Right, so just by looking at this from the weekly time frame, what we can see is we have this major information above this 200 EMA. Right, so we had a peak formation down there. We identified a push into a consolidation, and this major push into a consolidation, giving us this last push. So we did have three drops, three levels of drop. Right, so I always get a question by a lot of you guys, and you ask me, how do I know when to hold a trade? How do I know when to turn a spot trade to a swing trade? And things like this, when you look at the higher time frame, we can see that the market has already given us three levels of drop. Right, remember, the market does not have to only give us three levels of drops. These levels can go all the way to up to 5 levels. Right, but having a systematic approach is the best when it comes to trading levels and just trading BTMM. Right, so looking at this from the daily time frame, right, because obviously I'm just focused on what's currently happening right now, not really much of the bigger picture, right? As I was looking for trades. So one thing we can identify is very simple, right? We had price moving our way from this supply area. Right, as you can see, once price tapped into this area here, one thing you can see is price failed to give us a higher high. As you can see, price failed to break this high right here. Right, price failed. Price then later broke structure, right, and failed to give us another higher high. So this was clearly turning into a down phase. So what we can identify that has happened so far, as we get into the new year, is we've got a level, another level. All right, so right now what I can see is I have price playing around this demand area a lot. But one thing, if you've been watching my videos, I always say, once an area starts getting hits, too many hits, right, that area becomes weak. Right, but we're going to keep in mind that we already have three levels of drop. All right, looking at it from the monthly, nothing really much that we can identify on the left, so we're going to work with what we have. So this is what we can see. We had price giving us this consolidation area right here, right, breaking out. You can see the momentum, breaking structure, and price made its way back there. The reason why I got interested in this trade was, as price failed to make a higher high on this area, price then dropped the other direction, giving us a 1350 crossover, meaning this 50 EMA and this 13 EMA crossed over, which confirms the lock of a peak. Right, so this move right here was actually the first move back to the 50 EMA. Remember, this is our daily time frame, so that would be very different in our H4. This means this is the 200 EMA in the H4, as you can see. So remember, a 1350 crossover in the daily time frame, right, is actually a 250 crossover, right, meaning it's the 200 EMA crossover and the 50 EMA crossover. But if you move over to the daily time frame, it's just the 50 and 13. Right, so this was actually our first pullback, right, to the 200 EMA. Right, so this is what I saw. Right, and I moved down to the H1 time frame, and on the H1 time frame, what I can identify is we did have a stop hunt to that 800 EMA, as you can see, giving us the first leg. Right, so we had the first leg being given, price then went below. So first leg, price goes below the 13 EMA, closes back above, giving us the second leg, and we had a close below the 13 EMA. Right, for our entry. Right, so now I want to teach you guys an entry model which you can actually apply to your trading, or rather when you're trading peak formations, right? So if you have identified an M formation, right? Once you identify an M formation, right? So now some people might not be able to catch it here, right? Or you get to the market and the market is already moved, a great deal, right? You find some people entering right there as they've missed out, but this means you'd have to put your stop loss above here, unless you're going to look for entries which can lead to a lot of losses for you. But the best thing you can do, right, which I've actually identified, once the dealer rather big tested, or I've been trading for a long time now, right? Once the dealer gives us the second leg, right, of an information, right, and gives us a clean drop, right, for you to actually, trade a more confirmed move, what you would wait for is you're going to use your Fibonacci. All right, so you're going to pull out your Fibonacci tool, and as you know, I don't focus on a lot of levels, right? I'll show you on the charts right now, but the only area I'm interested in is the 50% or 6180 region. Why? Because I would want to see the market get back to that area and I will jump in. Usually we've got an EMA, and this is actually usually above the 13 EMA depending on the time frame that you're trading, but you can add that as a factor of confluence. Right, so from this area then you can continue moving down with it. So this is exactly what happened here. If we take it to the M5 time frame, all right, when the second leg was set, as you can see, where we had a second leg of a second leg, when the second leg was set, instead of you seeing this whole move getting to the market somewhere around here and entering shorts, what you can wait for a more confirmed entry, or rather, more confirmed entry, and a better stop placement, right? Because if you'd enter here, I mean, there's no pullback anyway. That means you'd have to push your stop loss above the high of the day, which can be a lot. If when you start ramping up lot sizes, that is when you see that it is a lot, right? Unless you're still trading 0.01, then I guess you wouldn't really feel it, right? You wouldn't really see much on your account, on your trading account or trading history, right? But with the bigger lot, as you start trading big lots, you want to always find better entry points in the market. So what you do is, when the high is already set, right, you wait for the pullback, right? In this case, we're looking at the M5 time frame. Obviously, to minimize our risk, we would take our fib from the high to where this drop stop before the pullback, and we wait for a move back to the 50%. So as you can see, that's exactly what happened. We had that, waited for confirmation. We had a close below 13 EMA, and that is where my entry was, with my stop loss just above this area. So in this case, that would mean we would be risking, because just a few pips above, risking 11 pips. And as you can see right now, this has moved for, well, almost 30. Not really. Currently floating 28 pips. All right, but these are the type of entries that you'd want. So I want to see this push all the way down. All right, as you can see, I already have my stop loss just below my entries. So we'll see how this goes. All right, but this is how you can keep it very simple for yourself when looking for entries or trading BTMM. Right. All right, guys, so that's it for today. All right, as I say, this was the first trade of the year, and we are gonna have many of these types of trades.